This is another edition of our Traction webinar series. Today we're going into how to increase your shred claims and also how to get that refund before you've actually filed it. Today we've got two guests with us. Jeff Christie, the CRO of Boast.ai. He will be doing the presentation on the R&D side. And we also have Manal Shaker, who is the CEO of Easily, who will help you on the financing side to get you that claim and that refund before you've actually filed it. A couple of housekeeping notes. We will be sending out a recording of the webinar today, so you should get that within 48 hours of it. And also there is a chat room on the side, so please feel free to enter any of your questions you might have throughout the session. We'll host a Q&A session at the end where we'll go into some of the details and answer some of those questions. If we don't get to all those questions, we can reach out on an individual basis to those just in case we don't get to those questions. So feel free to ask whatever you'd like within there. With that, I will turn it over to Jeff to get going, and hope everybody enjoys the presentation.
Awesome. Thank you very much, Russ. And everyone, thanks for taking the time to go through this. As Russ talked about, we're going to quickly hit over the SR&ED program, make sure everyone understands it, where we are and how Boast operates. And then we'll move into what Easily does in helping, which probably you a lot of interested in, getting your SR&ED claims a lot earlier than when the actual check flows from the CRA. So the main goal of Boast is to increase your SR&ED claim size. We use Boast.ai platform that we've built to help enable that. A little bit about Boast, if you guys aren't familiar with us. We've been around since 2011. We have offices in Toronto, Calgary, Vancouver, and San Francisco with a team of over 30 plus years of SR&ED experience. We file claims for upwards of 400 companies per year. The San Francisco office, not really in for this time, but we also deal with a U.S. research and experimentation tax credit. So if you have operations on both sides of the border, we can help you even more with SR&ED and the U.S. R&E tax credit program. So what will we go over today? Just so you guys know what's coming up. We're going to go over what SR&ED is, what qualifies, and when to claim it. A little bit around the justification that you need, documentation to support your claim if it goes to a CRA review, and then how to automate that type of process through our system, and then how to actually get that SR&ED claim before it's even filed, or at least portions of it, through groups like Easily. So quickly, what is SR&ED? Stands for Scientific Research and Experimental Development. It's actually two programs in one. So there's the scientific research side and the experimental development side. It's important to notice the difference because there's different types of qualifying criteria. Only about 2 to 4% of claims go in under scientific research. So we try and not think about that because the scientific research is usually done at universities for the pure sake of research. Experimental development is where we're going to focus because, like I said, almost 95+% of claims go in under that. And we'll go over exactly what qualifies to help you be able to understand that further. So some applicable industries so that people can kind of get their mind around, could I qualify? So a large portion of Boast clients live in that software development ICT space. But if you're developing things in oil and gas and energy, manufacturing processes, biotechnology, agriculture, pharma, there's a lot of areas where if you're advancing scientific knowledge and pushing the boundaries, it's a good chance that you could qualify for recouping money that you've spent on that process through the SR&ED claim or through a SR&ED claim. So it's really important for us to decide at the beginning here who can claim for SR&ED. So the biggest thing is, one, you have to be a Canadian corporation that's paying, you have to be a Canadian corporation. And there's two types of corporations in the eyes of SR&ED. And this is important because it dictates the amounts you can get and return types you can get. So you can either be a Canadian-controlled private corporation, which is exactly what it sounds like. You're Canadian, you're controlled from with Canada, and you're a private corporation. Or you're what would be considered a non-CCPC, so a Canadian corporation that's either foreignly held, controlled from outside of Canada, or publicly traded. So it's important to note the difference between these two because it determines the return rates that you can get. So from SR&ED, there's kind of there are three main categories that you can claim back on. The first is salaries that are associated with your experimental development. The second is subcontractors, and the third are materials. The salaries and subcontractors have to be Canadian based, and the materials are really specific, and they need to be transformed or consumed or used up in the process of testing. So most software companies won't be able to claim this because you're not smashing computers, frying servers every time you run a test. So make sure that we kind of look into that as well. These return rates are net return rates. So they include the provincial portion, the federal portion, and some either gross ups or, in subcontractors' case, reduction of eligible expenditures. If you're a CCPC, a Canadian Controlled Private Corporation, these are your return rates, and you can get back, or you get back, almost exclusively refundable ITCs, or in other words, cash. So if you're a non-CCPC, you can still claim back on the three categories of salaries or employees, subcontractors, and materials. But you can see here that return rates are reduced. And in general, what you're getting back is actually just tax credits that you can use to reduce taxes owing. Based on the province you're in, some provinces will have a small portion component that will let you get cash back in here. But this is part of the process that Boast helps you through to understand which category you're in and your possible return amount that you can get back.
Hey, Jeff, just want to jump in there quickly. A great point if you go back one slide, just talking about the differences in the return rate. So for people doing some planning about how they're building their team, if you're in your early stages, obviously makes a huge difference for having onshore salaried employees versus subcontractors, or even if you have an offshore development team. If you understand the criteria for what is eligible for SR&ED, you're obviously going to get a lot of money back from the government, which will reduce your costs significantly. So if you take that into consideration for your total cost for your development team, if you are doing work that is SR&ED eligible, it is much cheaper to have onshore salaried employees. Not only does it benefit you from having more transparency and communication lines open within your development team, but it also helps with that cost coming down. So just something to keep in mind when you're doing that planning for how you're going to structure your development team.
Excellent. Couldn't agree more. Like we said, the salaries and subcontractors need to be Canadian based. Quick question in here that said, what's an SME? It stands for small and medium sized enterprise, and it's what different groups use to classify business sizes. So now that we know if we can claim the types of things we can claim back on, the next question logically goes to, okay, well, what actually qualifies for SR&ED? And so SR&ED is all within the context of your technical development. It has nothing to do with the business context in which you're operating in and how unique you are to market. It's all about what you must be overcoming technically. So the biggest thing that needs to be determined is there a technological uncertainty? And that uncertainty generally means that there's nothing in the public domain that says, here's how you go about doing what you're trying to accomplish from a technical perspective. And there's no standard practice that says, here's how you go about doing this. Generally speaking, these uncertainties aren't ground up uncertainties. So you don't know 0 and you're trying to get to 100. Most of the time in your field of science, you can get somewhere along that uncertainty, but you need to then finish the remaining portion of it because it's truly uncertain. And that's where you go into the systematic investigation. And that's going to be a build, test, create hypotheses to try and prove out what you're trying to work on. And then the final is to be able to highlight what your technological advancement is. And the advancement doesn't have to be a commercial success, and it doesn't actually have to be a technical success. If you have a technical failure, then it can also show that there is that you kind of made an advancement, because now you know where not to go. It's very important that all 3 of these must be present. So it's not like, hey, I made an advancement, or hey, I had a systematic investigation. You have to be able to meet all 3 of these criteria. And at Boast, we have technical experts that come in, meet with your technical team, and have your technical team describe the work they've done in general. And then we're able to pull out the work that's SR&ED eligible. So a lot of people go, well, I don't know if I fit this criteria. That's part of our job, is to make sure that we go through with your team to ensure, or to figure out exactly what could be eligible. A little bit more on the technological uncertainty here. Again, like we said, challenges usually indicate that there's an uncertainty. In, say, a software developer's life, they probably encounter a challenge every single day. But sometimes there's standard answers to overcome that, and sometimes there's not. Again, you got to make sure that there's no kind of standard practice out there that says, here's how you go do this. And that this also resides, the uncertainty resides within the context of the company. So if you're Google, you might be able to figure this out real quick because you can throw 15 people at it. But if you're a startup with 6 people that just got funded, it might be a little bit more complex for you as well. A couple examples around the technological uncertainty. So there you can look at about meeting technical objectives. This is usually around the general classifications of you're having challenges with scalability of your system. Maybe you've built an MVP, you can handle 10,000 concurrent users. And as you grow your company, you need to handle 1 million concurrent users. And there's some technical challenges that come along with that. There's also, which of several alternatives will produce the best result. So a lot of people get confused here. If you are evaluating 7 different options and you pick one, that does not necessarily indicate shred work. If you evaluate 7 options, you pick one that's the best, and then you have to extend it or build on top of it to make it ideal for you. That indicates that there could be some shred work. As we move on, there's the systematic investigation. So the work must be performed by a qualified personnel. This doesn't necessarily refer to degrees in education. It just means that they have experience in doing that. So if you're in the world of software development, you're not taking your business development person who's never coded and asking them to do this. You're taking somebody who has either education and or experience to try and overcome this so that they're not just learning things that are actually should be known. And finally, we have to be able to show what the technological advancement was, what was gained, what was the knowledge gained from a technical perspective. And like it says in the middle, whether it was a success or not, when it looks from a technical perspective, doesn't matter. It's just, did you advance your knowledge base in order to try and address and overcome the uncertainty that we originally had?
Hey, Jeff, I'll jump in one quick before that. Just one thing just to keep in mind, with the SR&ED program, obviously it's a kind of, technological advancement changes every year. There's more open source libraries available. There's more third-party vendors that are available out there. So the qualification for SR&ED does change every year, which is some of the challenge in putting together a claim in the first place, because something that was SR&ED eligible a couple of years ago might no longer be, which is where expertise from Boast and other consultants come in to actually help you figure out what is eligible, what the CRA is looking for, and to frame it in a way that still allows it to be qualified.
Very good point, and especially relevant in software, because 6 months from now, what could be challenging today could be quite standard in the future, and we have to be able to frame that, and we help with that in the context of the claim. Just a reminder, if you guys have questions, please write them in the bottom corner here. We'll either answer them as we keep on going, or we can answer them all at the end. So a quick case study. So what could this mean to a company in the terms of an actual return amount? So the example here that we have is there's a software company that's based in Vancouver. They're considered a Canadian-controlled private corporation, meaning that they're a Canadian corp and wholly owned from within Canada. They have 7 developers, 1 front-end developer, 6 back-end, and we're assuming that their salaries are about $75,000 per year, and that after investigation, we see that 58% of their time that they've spent is going to be eligible for SR&ED. So the quick calculations on this: first of all, front-end development typically isn't qualifying. So the CRA disqualifies anything that's social science-based, and generally speaking, they take the view that front-end development is that. Then you end up with an expenditure pool, which is the $75,000. 75K at the 58% times the 6 people, and that gives you a return of $167,000 worth of refundable ITCs, which is a tax or a cash back. So you can get up to $167,000 back in the scenario like this. We're just going to quickly address a question here in the bottom, combining SR&ED claim and IRAP funded projects. So the IRAP doesn't necessarily mean that you're going to be SR&ED eligible. However, and then you can't double dip. So it depends on how your IRAP project's structured, if you're funding employees or subcontractors. But the portion that you put in yourself generally is able to be claimed, and the portion, assuming that there's eligible work, and then the portion that the The portion that the IRAP puts in, depending if they're funding employees or not, you can use it a bit in the proxy overhead lift. So there's a way to have them work together. They don't disqualify each other, but you have to make sure that you aren't claiming the IRAP portion through SR&ED if it does work in that way. Okay, back to the slides. So claim turnaround time. So you need to make sure that you file your claim within 18 months of your fiscal year end. After that, there's a complete drop dead deadline. So you may have to make sure that you're able to file within that time. The current claim, so you can file within 6 months, and you can file within 7 to 18 months, and there's whether you're filing in either of those, the same turnaround time. So the CRA has changed their standards recently and said, we'll either put you into a review and or we'll approve your claim within 60 days of you filing your SR&ED claim. One note here, if you're a non-CCPC, even if your claim's approved, you can still get audited within 12 months. So CRA reviews. So CRA reviews do not equal tax audits. So if they're reviewing the SR&ED, it's a completely different department. It's just what's within the context of the CRA or the SR&ED review. So multiple types of different SR&ED reviews. There's first-time claimant advisory service. There's technical and financials, and there's desktop and financial reviews. The great thing is that if you're working with Boast, we handle your entire review even before we ever invoice you, because we always work on a contingency basis. Right, moving on to the next one. A little bit on technical documentation. So to submit a SR&ED claim, you do not legally need technical documentation or time tracking. If the CRA chooses to review your claim, they're going to ask for substantiation of what was done to be able to show some examples of the work that you actually did. So the early stage startups don't necessarily always look at this type of stuff right away to say, oh, I need to make my documentation robust. But when you do start looking at documentation, you want to make sure that it's contemporaneous, created at the time, so that means dated. It highlights the technical challenges and iterations. In a lot of technical development, people are very good at saying, here's my problem, and then it was solved or not solved. They don't necessarily document the middle section that says, here's the 5 iterations that I went through, to try and get there. So we got to make sure that that type of documentation is there. And that's something that Boast helps all of our clients with, is to optimize their current systems. We don't come in and ask you to implement new systems, but we want to optimize the current systems that you use to make sure that you're capturing work that we can justify for SR&ED, but also everything else as well. On the technical documentation side, again, we're looking to highlight technical challenges and iterations, and then monthly granularity. You're looking at kind of stuff on a weekly and bi-weekly basis. This isn't like every single bug fix. These are the major technical challenges that were encountered by your team. Again, on time tracking, project and activity. So we're looking at SR&ED activities, and we're looking at general time tracking as well. Any type of system can be used. You can sometimes pull this type of information out of a system like Jira if you're using your story pointing correctly. The granularity only needs to be on a quarter, half-day increment and can be filled out on a weekly basis. So some more documentation is best practice. We're looking for hours per week that someone worked, and then if not, we can estimate based off story points. I really want to make sure that it's clear here that on the time tracking and on the technical tracking, that again, to submit a claim, these aren't required, but to defend a claim to the CRA if they review it, it's very helpful to have this because it gives them less room to push back. So if you don't have this type of information, it doesn't disqualify you from claiming, but it's a good reason to start working with a group like Boast so that we can help you get all of that going and ready to be submitted in the future. This is even a more detailed area into the documentation best practices that we can go over, but that we have templates like this that help show companies how they should be tracking with specific type stuff that was in relation to their own business. within the context of a system like Jira or other technical tracking systems. So a little bit about Boast, the Boast.ai platform. So we've built out a platform that enables us to integrate with several technical tracking systems to be able to pull in the information that you guys are currently producing from a technical perspective, run high-level analysis on it so that we are already off to the races by the time we and our experts meet with your technical experts, and actually be able to interview and start understanding what you've done so that we can prepare your best shred claim. We work back as far as we can. As we've told you before, you can claim up to 18 months back. The process within Boast is we prefer our best to work proactively. So instead of looking at this from a tax perspective and coming in at the end of the year, what we prefer to do is work with a company proactively and meet with their technical team quarterly. That way we're able to pull out the technical details of what is actually going on closer to the time when it's done. So from a financial perspective, shred might be a year-end activity, but from an engineering perspective, it really needs to be a throughout the year activity. And this allows us to help people optimize their documentation and really just make shred a much less painful process. So within the Boast area, we believe that we're market leaders. We are the only ones building software to help automate this process. We are contingent pricing. We use much less time of your team's technical time, primarily because we have technical experts that are coming in and asking you what you've done entirety and not asking you to self-identify your own shred claim. And again, we always work on a contingency basis, which means that our success in invoicing you is only related to your success of your claim being accepted. Russ, any questions that we want to address before we move into Manal, or should we save them for the end?
Yeah, let's save them for the end. I think it's important to get into the second part of that, and we talked about a little bit of this in terms of the process of tracking and documenting your shred, because the better process and system you have in place for implementing your shred and having a better estimate of what it is allows you to bring that cash flow forward, which is why we have one of our partners here, Manal, who is going to take over and walk you through some of the financing side of how you can get that cash before you've even filed it. So over to Manal, and we'll jump on some more questions at the end.
Hi, everyone. So we'll go over a bit about how you can finance your tax refunds to get them much sooner than waiting for the CRA. Just a bit of housekeeping. You can still continue to ask questions in the right-hand corner there, and Russ will collate them at the end and help us figure out how to answer them. So very quickly, Easily is a platform that actually started within a $2 billion US hedge fund. And that scale sort of allows us to come up with innovative solutions to complex problems, but at the same time have institutional backing to be able to do it and to fund the loans. And we've taken sort of a novel approach to financing tax credits. We are the global leader in doing this. We have a platform in Australia, and we're starting in the UK this year. So we have a lot of experience in being able to fund these. We take a capital as a service approach to funding tax credits, because these are short-term loans, because you'd be waiting 18 months for the CRA, and instead you're able to unlock these earlier. And so the idea is that, you know, you're accelerating the funding that you would have gotten had you waited for the CRA. We try to make the process as efficient as possible. We understand companies, especially startups and SMEs, do not have 6 months to wait to negotiate a financing like this. So our process is meant to be simple and devoid of any redundancies, so that, you know, you can continue spending your time building your company. It's meant to be reliable, so you have a pretty good sense of what you're going to be able to receive at the end of every quarter, and you can actually build that into your budgeting. And lastly, but most importantly, it's affordable. These are small loans, as we mentioned, and so they're meant to be affordable and something that you can access easily. So really quickly, just how it works. Basic idea is you join Easily. at the beginning of the year or at any point during the year. We kind of qualify you for the program. There's no cost applying. And very simply, once you do that, you're able to receive your funds on a quarterly basis. There's no interest payments. You simply, when you get the refund, we get repaid directly from the CRA refund. And the really nice thing about working and partnering with a company like Boast is that they make that process even easier on you. So in terms of qualifying you, we can pretty much guarantee that if you're working with Boast, they can actually refer you to us during their onboarding process, and we can get you on these quarterly refunds pretty seamlessly. The major benefits that I want to mention of doing something like this, there's really three main things that I want to touch upon. When you're using something like a SR&ED tax credit, you're building up an asset over the course of the year. The problem is that you're not able to unlock that until you submit your taxes and actually get your refund back. What easily allows you to do is actually get that advance every quarter instead of having to wait to submit your tax returns and get a response from the CRA. And in this way, what we have found that our clients will often plan and use that quarterly refund to increase sort of their return on their capital. And one very simple way of doing that is to actually potentially accelerate your R&D projects that you're working on that are SR&ED eligible. And so if you actually reinvest this back into SR&ED eligible projects, different provinces and jurisdictions have different return rates, but in Ontario, for example, if you actually just follow that process and put every dollar back in, you can actually increase the cash at the end by almost 52%. But obviously other activities, hiring an additional salesperson, additional marketing person, all have their respective ROIs. But really the main point is that it helps you sort of accelerate your roadmap and invest earlier by using non-dilutive capital as opposed to having to go out and raise more money. And speaking of, having to go out and raise more money, we totally understand that at the end of the day, as companies, you have to look at a diverse sources of capital, ranging from debt all the way to equity. We are not a full solution for you in any way. However, we can be an integral piece of that solution for you. And that's why we make it easy to access, low cost, quick timeline, so that this one piece that is reliable and efficient, you can get out of the way quickly so that you can then focus on all the other sources of capital that you will still need to get access to. And the other thing that I want to mention, and this really fits in with a lot of what Jeff and Russ were talking about earlier, part of what allows us to offer this in a very affordable way is that there is a disciplined approach to being able to get capital on a quarterly basis, and working with a partner like Boast to have a sense of what have you accrued each quarter, doing all the document tracking, doing all the tracking that Boast does in the background to make sure that you're actually prepared to maximize those returns. You're getting them earlier through us, but you're also making sure that you're prepared to defend the CRA review if it comes to that. And then lastly, what I want to mention is that as part of this, we're really looking to work with you as partners. As I mentioned, we're one part of your solution. We make it really easy for you to continue to work with other lenders and other capital providers. And one thing I always like to mention to clients that are, skeptical about using debt or sometimes actually skeptical about using equity is that you really have to figure out the right combination for you. And most of the time that is using a variety of sources. And so you should see us as a partner in that, in helping to diversify your capital stack. And we always want to be able to work with other capital providers. So for example, if you are a startup and you've just gone through raising a round of equity, most VCs will tell you, that's the best time for you to actually go out and raise debt as well, because you have the best credit profile, you're going to be able to get the best rates and increase your cash runway. You don't want to wait until you run out of all your equity and then look for that next cash runway. You really want to kind of build that up so that then you can kind of focus on meeting your milestones for your next raise, and you want to extend that period as much as possible. And easily is a great way to be able to bolster that right from the beginning and know that you have this steady stream of capital coming in on a quarterly basis. And then lastly, I just want to mention just how seamlessly this all works together. If you're partnering with Boast on the SR&ED refunds, as I mentioned, we try to make this process very quick. So typically we can get companies that first check within 2 weeks. But if you're working with Boast already, we're able to streamline that and get that to you in half that time. And so this has been a really great partnership for us. And, we'd love to work with more clients working with Boast since they do have such a efficient, streamlined process that really reflects how we are trying to do things as well.
Awesome.
So
yeah,
should we open it up to questions?
Yeah, I wanted to highlight on one point, actually, just
please.
on the cash flow side of things. Just from a regular filing standpoint, even the most efficient and organized financial teams aren't going to have their books in order till, possibly mid-February, end of February, and that's at a very efficient pace. Mm-hmm. So you're looking at, before you file your T2, probably could be, end of February into March. So there's another 2 months on top of that where you're still waiting, which is why it does become important to finance that and get access to that cash earlier, because once you file your T2, you still have to wait for the CRA to approve it. And we'll go into some timelines a little bit for first-time claimants versus second-time claimants, but that's why, being able to bring this cash flow forward really makes a difference in your growth profile for your company.
Yeah, great point.
So with that, I'm just going to jump down here and we'll start at the top. I think there was a question back. I'll throw this over to you, Jeff. Just talking about the first-time claimant process, or if you've never filed before, what's that look like? And what can you expect from a refund standpoint from your first-time filing versus subsequent years when you file?
For sure. So first-time claimant is a specific definition. So it's really the first time you've claimed within that corporate entity. So generally, for most companies, that's just the first time you've claimed in general. However, if your company has gone through something and you're now a new corporation and you're claiming and you have a new CRA tax number, that's going to make you also considered to be a first-time claimant. So it's really the first time that a claim's submitted under that business number and CRA tax number. So hopefully that helps answer that question. And then on timelines, when it comes to turnaround times, so once the CRA chooses to either put your claim into a first-time claimant review or any type of review, generally that process takes anywhere from 2 months to 4 months to go through the review process. And that's mainly on the CRA's side because they give themselves 30 days after almost any interaction to respond back. But once the claim's approved through the audit process, then the checks flow within 7 to 10 business days. If your claim is just 100% approved without a review, once you get your notice of assessment, then the claim is, then the check again flows within 7 to 10 business days.
Very cool. Thank you. Another question. I don't know if we got to this in the chat, but just talking about founder salaries, director salaries, and the eligibility of those salaries.
Very good question. So the only way for any founders or directors in general to be claimed for SR&ED is for them to be employees of the company. And then if you're considered a specified employee within the business, so owning 10% or more of the business, then the max of your time that you can claim is 75%. So you can't claim yourself up around the 100. So if you have a founder who's the CTO and is just churning out code, the most you could ever claim for them is 75%.
Great question. Another one, just wondering on, someone's asking about the statistics on Boast AI success rate for SR&ED filings.
Yeah, so I like to keep that one. The way I like to answer it is we are very good at filing SR&ED. We've been around for 8 years. We work on a contingency basis, and we employ 33 people full time. So therefore, our success rate is very good. The success rate's all within the context of what the CRA reviews, and the CRA reviews 25% of claims per year. Boast review rate is well below that. And for the exact numbers, I'm going to be cagey. Give us a call. Let us give you the full sales pitch, and we'll follow up with that.
Thanks, Jeff. Awesome. This one's for Manal easily. Just wondering, how does it work if you advance the funds and the SR&ED project is denied?
Yeah, so that's a great question, and actually works really well with the previous one about success rates at Boast, because part of our qualifying process is making sure that we believe that your SR&ED project is going to be qualified, and working with partners like Boast. And if you become their client and learn about their success rates, we'll tell you a bit about how we protect ourselves against that. But at the end of the day, it is a loan. And so the company is responsible for it, but we try to make sure upfront that we're actually qualifying and lending to companies that we know are going to be able to receive those SR&ED refunds.
Yeah, I mean, obviously, lending in the SaaS market is very different than lending from actual, businesses that have tangible inventory and collateral that they can, set up against the loan. So it always is a little more difficult, but I'd say it's probably a little more due diligence that goes into it up front, just to make sure they're comfortable with the loan, versus, a lot of the big banks are looking for that collateral or personal guarantees, where some of the other lenders easily will avoid those things.
Yeah, so we don't take any personal guarantees. We try to make the process simple, but that's why we, heavily rely on companies like Boast to help us qualify and make sure that you're actually applying for SR&ED credits and SR&ED refunds where eligible.
Perfect. And I think another thing that we touched on earlier, I just wanted to highlight in terms of the types of activities that qualify for SR&ED. So once a project has been identified, there are categories called supporting work where, you're doing QA testing, some front end work that, you need to do to be able to test the solution. And then once you've actually qualified that, you can bucket some of the supporting work into your claim. So it can get larger, but then again, that's why companies like Boast exist, to help you navigate that and understand what qualifies and what doesn't as supporting work.
Yeah, I'll kind of build on that. There's a question coming in here that says, non-technical work can't be claimed direct, or sorry, do non-technical work founders that manage teams. So yeah, you need core technical work to claim, and then you can claim supporting activity directly. So Christopher, your answer isn't quite right there. There is a proxy overhead amount, but you can actually claim supporting work directly within that. So so Greg, you can, as long as they're having technical direction. It's just usually we claim a lot smaller percentage of their time because we can't justify anything more than that.
Perfect. This one's for Manal also, just on understanding the compensation structure for Easily.
Yeah, so on each of the advances, we do charge an interest rate. Our interest rates range from 10 to 14%. But again, it kind of depends on a case-by-case basis. And so if you're interested, I suggest reaching out to Russ and Jeff and starting the process with Boast, and we can talk about how it all works together.
The one other thing I just mentioned for first-time founders, just understanding the whole grant landscape. One thing that really differentiates SR&ED from the other grant programs is SR&ED is a refund against expenditures, so a refund against those dollars spent. versus majority of the other programs are a grant where they give you the money and you have to provide matching dollars up front before the project started. So just something to consider when thinking about SR&ED, and if you qualify, it is an expenditure, based off of your past expenditures. So you do have to be spending the money to get the refund back. Jeff, was there any other questions in there that I might have missed? I think we've gone through most of them.
Nothing else that I saw going through there. There's some detailed conversation going on in there, but I'd always have to say that it's best to call us because they're all individual questions that have a lot more context that we need around them. So yeah, give us a call or send us an email and we'll set up a real quick conversation to get a little bit more detail that we need to fully answer those in a prudent way.
For sure. And Christopher, we'll reach out to you directly just with an answer on that question. But everybody else, thanks very much for joining us today. As I mentioned, the recording and slides will be available for everybody. We'll be sending that out within 48 hours. I hope it was informative for everybody. And please feel free to reach out to us. We'll send out our contact information as well. We are happy to get on the phone and help guide you in the right direction for financing opportunities or for building out your SR&ED claim. So thank you very much. Thanks, Jeff, and thanks, Manal, for the time today. And thanks, everybody, for joining.
Thanks, everyone.
Thanks, guys.
Take care. Have a great day.